we'll be analyzing volatility 25 index. And I've told you guys that you need to make sure that your analysis is very simple. So what we are going to be making use of today is trend line, trending range, the 50 level of Fibonacci, and entry confirmation. Our entry confirmation include order block and imbalance, right? Demand and supply zone. So for a trend line, this is what you are going to look out for. Market is moving an uptrend, forming higher high and higher low, higher high and higher low. So make sure that the trend line join the lows together. The same thing is applicable to bearish trend. Lower high, lower low, lower high, lower low, lower high and lower low. So when you are drawing the trend line, make sure it joins the lower highs together. Then trading range. What is your trading range? For a bullish trend, your trading range is the recent higher high and higher low. We are expecting the market to reverse below 50 level of that trading range before we start looking for entry. That is why we are making use of Fibonacci level. So what is our entry confirmation? Right? Our entry confirmation is change of character. For example, when you see this at lower time frame, this is change of character, right? Then you wait for a retracement to a order block or point of interest. Then the market will move like this and push up. Another way you can determine your entry is using trend line alone. So for a bearish trend, the market will keep on moving like this, right? So you wait for the moment the price will break the trend line. So when it break the trend line, identify this level. So wait for the price to come to this level, right? Then you place your entry at this level. Then the market will push up. Another thing you can do is to make use of Fibonacci level around this region. So when it moves to 50 level, right, just wait for another block in that region. When the price get there, enter the market and the market will push up. So let's analyze this trade. Anytime you want to trade, you start analyzing your trade on daily time frame, right? So you can go from daily time frame to 1 hour and 15 minutes or 5 minutes. That is your entry time frame. Looking at this market presently, let's use trend line to determine the trend of the market or what we are looking for. So previously you can see that this market is bearish, right? Then what happened? There's a breakout of this level, right? Look at this, okay? There's a breakout of this level. Let me make use of this. There's a breakout of this level. The market push up. Now, so you can see that when the price break this trend line, it's push down. So this is bearish. This is bullish, right? But presently, what is the market doing? You have to keep it simple. There's no need for you to complicate anything for yourself. Let's just make use of this trend line to analyze this trade. Look at this now. Look at this point now. Now, you can see that this one is bearish, right? So, what is our trending range? Our trending range is the recent high and the recent low. So, from this chart now, this is our recent high. Why this is our recent low? Normally we are expecting this price to come to this level and push down, right? That's what we are expecting. Now let me zoom this place out. Okay, okay, now pay attention here. Okay, pay attention to this. If you look at this place, you can see that this is an engulfing candle. This green candle, right? This is an engulfing candle. Now this is what I'm expecting from this market. Personally, because the market is bearish, I want to enter the market around this level. I want to enter this market around this level. This is what I'm expecting because the market is bearish. But you know, this is daily time frame. Anytime you want to enter the market, you need to go to lower time frame, right, to determine your entry. So I will now move to 1 hour. So this is 1 hour. You are to redefine your zone. You are to redefine your zone. So how are you going to do that? So identify an order block here around this region. So you can see that. Okay, let's use 4 hours to determine that. Okay, you can see clearly that this is another engulfing candle. This candle. So I'm expecting this market to get to this region before I will start looking for entry. But pay attention to this. That we identify this zone does not mean that the market will reverse to sell direction. The market can decide to break this zone to form change of character and continue to move in an upper direction. But because the daily time frame is bearish, that is why we are looking for opportunity to sell. How am I going to enter this trade? You can just make use of only trend line. Look at something here. Okay, now if you pay attention to this level, you can see that this place is bearish, and if you use your trend line, you can see that this market break this level. There's a change of character here at this level, then the market keep on pushing up. So, and another thing that you can pay attention to is that if you make use of Fibonacci, right, retracement, this is our low, this is low, this is our high. Normally I'll be expecting this market to reverse to 50 level before pushing up, but you can see that the market did not reverse to 50 level, then it kept on pushing up. One thing about trading that you need to know is that market may not always respect your analysis or what you determine, but normally you will not have missed this trade if you go to lower time frame. So now let's push this stuff up. This is our new low, right? Why this is our high. Now you can see patiently that this market reversed to 50 level. So if I miss the trade here, I will have entered at this level, and this place will have been my TP. I will have do it like this. Okay, see, assuming I entered the market here, this point will have been my TP. But note, anytime the market is moving in your direction, shift the stop loss to the profit zone. Do you get? So that it's either you break even or you earn. Now, if you also look at this low, this is a new low, right? This place is low, why this place is high. You can see that this market, we are expecting it to reverse to 50 level, but what happened? Now I want to show you something. Let's just identify this level, right? How will you enter this trade on lower time frame? Let me go to 15 minutes. 15 minutes. You can make use of your trend line alone. Look at this. This is a retracement. Can you see this retracement? That is liquidity. Can you see? So you can just be making use of your trend line. You can see there's a breakout and a retest. This is the point where the price break this trend line. This point, the market retrace on that line and push up. And you can also make use of your Fibonacci retracement, since you have confirmed that the market is moving in a, look at this. I mean, this is low, this is your high. You can see that it reversed exactly to that 50 level. And if you look at this place to this place, this is a change of character. You will have entered from here, then push up. So what you just need to do anytime you are entering the market is that wait for a change of character, apply your Fibonacci retracement, allow the market to retrace to that 50 level before you enter the market. Now let's go back to that 1 hour. Now you know that I'm waiting for sell opportunity on higher time frame. So this is what will happen. I will draw my trend line from this point. I draw my trend line from this point. So can you see? Make sure it joins the lows together. Now from 1 hour, this is my recent low. This is my recent low. So if this price come to this level, right, and move downward and break this level, I already know that this market has changed direction. This is change of character. Then I will wait for retracement. Then I will allow the market to push down. I will enter the market around this level. So, but presently, what we are waiting for is this market to come to this level and push up, because the market is still moving to an upward direction. So when it gets to this level, right, I will start looking for opportunity to sell. And in order for me to sell, this is what I will just look out for. I will wait for when the price will break this level, right? Either on 15 minutes or 1 hour. When it breaks this level, I will just allow the market to reverse. Then I will enter the market. See, it's not hard. Now, look at this. I also want to say this. This is low, right? But this market has not yet formed a higher high. This is lower low, but this market has not yet formed a higher high. So when it forms a higher high, assuming it formed the higher high there, I will make use of my Fibonacci retracement. I will place it here. I will make use of my Fibonacci retracement. I will place it around this level. So I will wait for it to reverse to 50 level for me to look for buy opportunity. Do you get? So but if it break the trend line and form a retest and push down, I'll be looking for sell opportunity. See, that is how to make use of trend line. Then I will still do more videos on that. So what I'm expecting you guys to do is that you guys should always come online to observe this market. The moment this market gets to this orange line on 1 hour, start waiting for opportunity to to sell. But for you to sell, you can wait patiently for 1 hour time frame trend line to be broken like this, something like this on 1 hour before you can start determining to look for opportunity to sell. For the price to break the trend line on 1 hour, it will first break the trend line on maybe 1 minute, 5 minutes, 15 minutes. So for you not to miss or for you not to jump into the trade wrongly, allow the 1 hour trend line to break first before you start looking for your entry. So that is that.